Bitcoin. What comes next? The $1 million question. The $1 million Bitcoin question, that is. The reality is, right now, we're in a very bearish period in the market, obviously. You know that, unless you've been living in a cave and you just come out today. Welcome back, by the way, in case that's you. For everyone else, we know this is what is going on in the market. So in today's video, I want to talk about where we could be heading next for the market, why I think that 2022 still has a lot of fuel left in the tank, and we could still see new highs for Bitcoin later this year. My name is Lark. Every day I make videos talking about cryptocurrency investing. If that is a topic that you like, appreciate learning about, like keeping up to date with, then quick tap on the thumbs up button to let me and YouTube know that you do like that kind of content would be supremely awesome. So thank you in advance for taking a quick second to tap on that button. By the way, if you'd like to trade some cryptocurrencies, get yourself an account over at Femex. Use the link down below. You'll get 10% off your trading fees, up to $3,600 in bonuses. You'll be able to trade all of the best coins, Bitcoin, Ethereum, Tezos, Chainlink. They got all of the good stuff over there. So check that out if you are a trader. Now, let's go ahead and get into this. So, Bitcoin had a nice little rally the other day. Let's just bring this up here very close. Nice little rally. You know, we had right down here, crashed down into under $33,000, came back up. We didn't even get to our downtrend line. There's our downtrend line. Didn't even kiss it. Didn't even get a little peck. Nope, nothing. 50-day moving average, pretty long way away from that at the current prices. That's all the way up there at $42,500 approximately. We're all the way down here. 200-day moving average. Oh, that's been a long time. Long time since we had our old friend, the 200-day moving average, over for a party. Long way away. It's thousands and thousands of dollars away. The 200-day moving average is up around $49,000 at the moment. And look, keep it really simple in the markets. The 200-day MA, it's the bull-bear line. Now we will have our bullish recovery, our confirmation of a bottom reversal under the 200-day moving average. But realistically, when we are under the 200-day MA, that is a bearish time in the market, quite simply. When we cross back above it, the bulls are back in charge of the market, and we are very far away from crossing back over that. However, during this time, just because we are in a bearish period in the market, reframe your brain. What is the money doing? The long-term believers in Bitcoin. Well, of course, we covered lots of stories about, massive amounts of Bitcoin exiting the market. We covered, MicroStrategy buying more Bitcoin. We have long-term buyers here, though, gobbling up the dip again. Bitcoin balances on exchanges, you can see here, going down over the last few months. Pretty interesting, actually, that we did have a massive retail sell-off 2021 summer, middle of the year, whereas now we have this very bearish period going on, but we haven't actually had a massive influx of Bitcoin into exchanges. That means long-term holders are basically just continuing to accumulate. So this shook out a lot of the tourists right here. This is the long-termers basically buying more, continuing to suck Bitcoin off exchanges and dump it into their hardware wallets. You can also see this here, long-term supply, long-term holder supply, basically barely dropped at all. So still very, very high, even through this dip. Long-term holders are not panic selling. They're just hodling on, basically. Now let's go ahead and talk about, that's the current situation. Let's talk about what could come next. And I think in order to do that, we have to take a little bit of what just happened in the stock market. So we had a big sell-off for Facebook yesterday. We had a big sell-off for PayPal, PayPal's worst single day of trading ever. There's a lot of volatility right now in the stock markets because there's a lot of fear in the stock markets. Anytime any little thing happens, the market overreacts either in the positive or the negative. PayPal's a great example, down like 24, 25%. Like you don't often see, you see it in crypto a lot, the kind of charts that go like da, 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 boop, it's down, like an elevator. You don't see that as much in the stock market, but that's exactly what happened to PayPal stocks and Facebook stocks. Yep, Meta is called Meta now. Facebook stocks yesterday, they got slammed hard. However, today we saw Amazon come out with a positive earnings report, went up 15%. Big volatility in either direction. We see Facebook and PayPal not meeting expectations, sales and growth down, slammed by the market. Amazon, decent, up big time. So we're seeing a lot of volatility in the stock markets right now. We're kind of all over the place, and that stock market volatility is the exact kind of volatility that's flowing over into the cryptocurrency industry right now. So we're continuing to have a lot of this volatility. However, we do have some Wall Street strategists who are predicting that the stock markets are going to end higher in 2022. Both of these guys predicting around 15% higher close for the stock markets by the end of the year. Now you might be thinking, Lark, come on man, it's crypto channel, dude. Why are you talking about the stock markets? Because we have to talk about the stock markets, because as more and more institutional money comes into the market, the more linked our fate is with the equity markets. You can see it. When tech stocks boom, crypto booms. When tech stocks sell off, crypto tends to sell off as well, except in a more volatile fashion. The entire cryptocurrency industry trades like a bunch of mega volatile tech stocks. Right from the little stuff up to the big stuff, and Bitcoin's kind of like an index of all that in terms of, being this directional beast. When Bitcoin's going up, it drags the market with it. When Bitcoin's going down, it drags the market with it. And there's always some exception. There's some altcoin that's, blasting higher on any given day. But we're not in like a mega rally season right now, because stocks are still in a fear season. Equity investors are, looking at this. The funds, the institutional funds, all these guys are say, well, what's going on in the tech sector right now? Crypto is an extension of that. Retail investors as well. Markets are going down. Everybody's afraid, right? People are afraid to buy when the prices are cheap, and they're greedy to buy when the prices are pumping, which is, of course, exactly the opposite of how you make money in these markets, but that's a different story. So what's the reality of what's going to happen? Yeah, it's nice to have some Wall Street suit dudes being like, hey, the markets are going to go up. Thanks, suit guys. What's the data say? Here is an article from Forbes that gives us the reality of what is likely to happen. So the Fed is going to raise interest rates this year. How many times? Still to be determined. Could be 3, could be 5, could be 7. We shall see. First one's probably coming in March. Now, what happens in years when the interest rates rise? Stocks do well. Now, the first few months might be a bit shaky because markets panic. They're panicky. But the reality is, as the effect of those rate rises start to settle in, the economy cools down a little bit, and hopefully it cools inflation down. Runaway inflation is not a good thing for the economy. I know it helps our narrative of, Bitcoin's an inflation hedge and all that stuff, which it absolutely is. But you get too much inflation and it starts to have a negative impact on the broader economy. So the Fed cooling that down, or trying to anyway, with interest rate hikes. In the past, historical data here, past does not determine the future, mind you, but it sure does rhyme, doesn't it? So if we look at the last times of the federal rate raise increases going back into the 90s, 94. Within 12 months, the stock market finished up 2.5%. Not, dramatic, but okay. 99. Stock market finished up 8% in the next 12 months. 04, 7.5%. 15, 11.3%. The average, 7.3%. So that means the Fed raises rates in the next year. The stock markets, in the next 12 months, the stock markets are actually up. This is a good indication of what could happen to the crypto markets, which is why we're talking about the stock markets today, because if the stock markets go up, crypto's probably going to follow right along with it. By the way, Dan Crypto Trades shared this. Now, we don't have a lot of history of crypto and Fed rate hikes, unfortunately. However, here's an interesting one for you. The one that we do have, Bitcoin experienced one period of Fed fund rate hiking in its history in 1617, the last big bull run. From the start to the end of hiking, it gained 1,760% in value. Right? So that's where we started here. That's where the Fed started interest rate hikes. This is where they ended interest rate hikes right here. The gains, of course, if you take it up to the peak of the 2017 bull run, 6,700%. So right now, we are in a period where the rate hikes are about to start. If we see something like that, one, it invalidates the Bitcoin 4-year halving cycle thesis, which I kind of feel like may already be invalidated. I'm kind of really leaning into we're in the lengthening cycle theory. We are, looking at a potential super cycle as adoption soars. Another 3.4 billion people come in by 2030. That's like crazy stuff, dude. So this is an interesting thing. Obviously, we can't draw too much off of just one time of something happening, but, hey, food for thought for you to think about. Here's another interesting one. Some more food for thought. This one is from Matt Hyland. NASDAQ pre-dot-com bubble versus Bitcoin today. Showing some interesting similarities. Perhaps history is rhyming here. Similar time frames, similar fractals, similar corrections, similar market cap sizes. You can see here the NASDAQ, very, very similar pattern to what we're seeing. Big sell-off, new rally, correction halfway up, hitting a new high, very, very similar market structures here. Coming back down massively before, soaring, absolutely soaring higher. Will that same fate come to Bitcoin? Perhaps. If we get our Bitcoin spot ETF approved, this is the kind of chart action I would expect. When that's going to happen, who knows? The SEC has been pretty anti-Bitcoin ETF recently, but they're going to approve one. It's only a question of when that happens, but it will come. We will get a spot Bitcoin ETF at some point, and that'll probably cause that exact kind of market structure to play out. We need a new catalyst for Bitcoin, and if that happens, well, we could get this kind of similar market structure, and then there's the bust afterwards, but that's the deal with another time. We want the pump first. Here's a chart too I want to share with you from Credible Crypto. So basically this is looking at the Elliott waves, right? So first wave, second wave, third wave, fourth wave right now, and that would then give us a fifth wave. So this is what is called a running flat right here, basically. So essentially that means that this current price action, we got down to like 33,000 the other day, may have been the bottom. And then we could be getting ready for a mega rally for the rest of the year, where we see prices, going absolutely to the freaking moon. End of 2023, we get, our $100,000 Bitcoin, all your altcoins go crazy. Everybody buys new cars and watches and all that fun stuff, right? Now, we might get what's called an extended flat, which essentially would mean that the price is actually going to come kind of down into here somewhere. So maybe we're talking about upper 20,000 range, mid 20,000 range before we get the fifth wave and a massive rally up to $100,000. So right now it's looking like the flat running thesis is potentially in play for our fifth wave to come in here in the not so distant future. So this gives you some frameworks to think about and look at, like, okay, what could we see the market doing? Right? We have the interest rate reality of what could happen to the equity markets. We have some good Hopium charts of how we could see things playing out over the next months in 2022 that could actually see a massive rally coming in for Bitcoin. Anyway, just put an asterisk on all this. Nobody knows for certain what is going to happen in the markets. We all have our frameworks, our ideas, our hopes, dreams, desires, the Hopium as well. What's my plan, right? They're in this current bearish period. I'm just accumulating. I'm buying more Bitcoin. I'm buying more Ethereum. I'm holding it for the long term. If the price goes down more, I will accumulate more. I can do that because I've got good cash income coming in from a wide variety of sources, whether it be stock dividends, ad revenue from YouTube, or, stablecoin lending, or any of that stuff. There is cash available to continue to accumulate if we dip down further. But I'm taking a long-term view on these assets. I'm going to be holding my Bitcoin and my Ethereum and some other altcoins perhaps until 2030. Well, Bitcoin, I don't know, forever. But this is the thing, is maybe the Ethereum forever too. But you got to take that long-term perspective. By 2030, how much are these assets going to be worth? Everyone wants to get rich overnight. But if you can just be patient, it's like a superpower in this market. That's the reality. That's the reality of cryptocurrency investing. You have to keep a low time preference. If you do, your chances of achieving financial freedom and massive financial success from investing in crypto, near certain. If you have a very impatient kind of attitude, you're probably going to get wrecked. That's just straight up. Anyway, just my 2 Satoshis for the day. You'll let me know what you think about all this stuff down below in the comment section. Thanks so much for watching, and peace out till next time.